Hey everyone, welcome back to the channel. If you're looking to invest in mutual funds but aren't sure which one is right for you, this video is for you. Today, we're going to walk you through the process of choosing the right mutual fund, one that aligns with your goals, risk tolerance, and overall financial plan. Let's dive in. Before you jump into investing in a mutual fund, it's important to start with the basics: your investment goals and risk tolerance. Understanding these two things is crucial in picking the right fund. First, think about your investment goals. Are you saving for retirement, a down payment on a house, or maybe your children's education? Your goals will help determine the type of fund you should choose. For example, if you're planning for retirement, you might want to go for an equity fund that invests in stocks with higher growth potential. If your goal is more short-term, like buying a car or saving for a vacation, you may prefer a more conservative approach like a debt fund or hybrid fund. Next, think about your risk tolerance. How much market volatility can you handle without stressing out? If you can stomach some fluctuations in your investment, you might consider equity funds, which are riskier but have the potential for higher returns. On the other hand, if you're a bit more risk-averse, debt funds or hybrid funds, which combine both equity and debt, might be better options for you. Now that you have a sense of your risk tolerance, it's time to evaluate your financial needs and time horizon. Your time horizon refers to how long you can keep your money invested before needing it. If you're investing for the long term, say for retirement, you have the luxury of taking on more risk. You can invest in funds that may be volatile in the short term but have the potential for long-term growth. But if you need access to your money soon, for example, in the next 3 to 5 years, then a low-risk fund, like a debt fund or a liquid fund, would be a more suitable option. These funds typically offer more stability but lower returns. Also, think about how easily you need to access your money. If you're planning for something like a home purchase or emergency savings, make sure you choose a fund that allows easy withdrawal without penalties. Now, it's time to research and compare different funds within your chosen category. Here's what to look for. First, check the performance history of the fund. Look at how the fund has performed over 1, 3, and 5 years. Past performance isn't a guarantee of future returns, but it gives you an idea of how well the fund has done in different market conditions. Next, consider the expense ratio. This is the fee charged by the fund for managing your money. Funds with lower expense ratios will eat less into your returns over time, so it's a good idea to opt for funds with a reasonable fee, especially if you're planning for the long haul. Also, look into the fund manager's track record. A strong fund manager can make a significant difference. Check how long they've been managing the fund and their overall performance during different market conditions. Lastly, evaluate the fund's investment strategy. Does it focus on large-cap stocks, or does it invest in small-cap or specific sectors? Choose a strategy that aligns with your preferences and goals. Before making your final decision, think about how the fund fits into your overall portfolio. Remember, mutual funds are a great way to achieve diversification. But don't concentrate all your money in one fund type. If you already have exposure to equity, consider adding some debt funds or a hybrid fund to balance out your portfolio. So, there you have it. To choose the right mutual fund, start by understanding your investment goals and risk tolerance. Then assess your time horizon and financial needs, research the fund's performance, fees, and the manager's track record, and make sure your fund fits into a diversified portfolio. By following these steps, you'll be well on your way to choosing the best mutual fund for your financial goals. If you found this video helpful, give it a thumbs up, leave any questions you have in the comments, and don't forget to subscribe for more investment tips. See you in the next video.